HIMS attempted to release a $49 waitlist pill. It got shut down, it got rejected, and it even got threats of language going to the DOJ. In this video, I want to revisit a slightly different viewpoint on this that I haven't seen shared before. What I want to do is break down how the pill would have affected lifetime value and how it changes customer behavior and how the forced withdrawal really reshapes the platform's growth plan. This is not a hype video. I want to invite you to a different line of thinking with the recall and reframe potentially what this looks like for the economics under pressure.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
And if you don't know who I am, my name is Mikhail and I've lived remotely for the last 8 years and built systems which has allowed me to do this. Freedom is one of my highest values and it's why I'm a partner at X10, where we've built the AutoPilot software that can trade for you. One of the problems we saw in the market was people who want to get into day trading, and a really good thesis to live by is 20% of your portfolio in short-term positions and 80 on more long-term projects. Now with this 20%, most of the time we've seen from the hundreds of conversations we have is that day traders or people attempting to become a day trader lose upwards of $10,000 learning in the market. These are expensive lessons that the market teaches, right? And we've solved two problems with our software that's been operating in the space the last 4 years. We've got about 500 members now. One is you don't have to invest hours and hours and hours of time learning how to day trade, watching stocks, glued to a screen, checking every headline. You don't need to do that. What you can do is allow our pro traders to trade through your brokerage account for you. The great thing is you never have to send us any money. All the buy and sell signals go directly to your account, so you can have results like this and results like this, and even clients asking how their friends can get involved. We've been doing this for 4 years, and over these 4 years, we built a system where we project anywhere from 8 to 15% returns every single month. So if you started with $10,000, which is the minimum, you can look at potentially being at $54,000 in the next 12 months. So if you want to find out more about that, there'll be a link under the video. Click through there. I'll jump on a call personally with you, walk you through the entire thing and see if it's a good fit. Anyway, let's get into the video. There's two figures you really want to look at when you're looking at a subscription platform. It lives and dies by two numbers. The first one, customer acquisition, which is CAC, and lifetime value, LTV. Everything else, stock moves, price points, headlines, is noise unless these two numbers improve. Now, before the semaglutide pill was announced, HIMS revenue model looked a lot like this. People would join for hair loss, skincare, sexual health, mental health, and GLP-1 injections. These all generated recurring revenue, but injections are expensive and they require commitment. And psychologically, needles feel really serious. It's not an everyday thing that mum and dad just wake up and jab themselves with needles. So pills are an everyday thing, and that difference alone really lowers friction. And if you've been following me for a little while, the big thing I keep speaking to and why I see this being a really good long-term project is the HIMS' ability to reduce and lower the friction and the entry point for people to get started. It's a few clicks on an app and they're already immersed in the brand, in the software, into the platform, compared to going to a GP, booking a spot, going to see a specialist, sitting down, waiting and waiting and waiting and waiting and waiting in the waiting room. If we look at a quick comparison to Netflix, look what Netflix done. You can sit at home in your underwear, you never have to leave, and you can just binge every single thing you want. Now, I'm not suggesting you do that, not against the occasional Netflix binge, but what they done was they reduced the friction of needing to go in your car, go find a car park, walk around, look for something, find it, come back home, and then play a movie. HIMS is doing something like this in the healthcare space, very, very similar. And that ease and difference can be a massive deciding factor. Over the years, I've looked at funnels that are generating millions of dollars a month, and just by reducing 1 or 2 clicks through that process of someone booking a call or buying something or going to a checkout can massively increase the revenue. So if we look at the pricing plan that was introduced on February 5th, $49 for the first month and then $99 per month thereafter. That sits in the middle zone. It's not disposable, but it's not an intimidating amount either. Similar to a gym membership or a wellness subscription, right? So a product like that could increase conversion, could extend retention and lower CAC relative to higher cost injectables. And if you can lower CAC while increasing retention, it just generally is going to create more rising economics inside of the business. In the simple maths, if someone pays $99 a month and stays for 6 months, that's about $600 in gross revenue. And even modest platform retention on that revenue drives higher lifetime value. That is the structural thesis for platform growth. And here's where this really matters. After a couple of days on the market, HIMS ceased offering the pill, and regulators, notably the FDA and HHS, intervened, raising concerns that the compound semaglutide product was not complying with the federal law, and we saw what happened. February 7th, they shut it down. And within days, Novo also filed a patent infringement lawsuit related to the offering. Now, that sudden reversal really does matter. They're not empty bullets, these things that came at HIMS, right? But it really does highlight the limits of execution in a regulated health category. It also shows something deeper. Platform economics do not always unfold in a vacuum. The regulatory pushback and legal threats, including obviously the DOJ getting involved, highlight that access economics must align with regulatory structure if they're going to scale. So if we revisit the economic engine in this new light, even though the pill was pulled, right? Even though that was taken away, the structural forces around lifetime value didn't disappear. So lower friction entry points still matter, and psychological barriers still really shape conversion. So once people are inside a platform, the odds of cross-sell really rise, and telehealth still nudges ongoing engagement. So the difference now is that HIMS needs a pathway that is compliant and defensible, not only just a low price point, and that reshapes the thesis. So early platform growth is not a straight line. It's never going to be linear, and it surprises me when there's an expectation that it's always going to be linear. But there's not many things in life other than getting old is going to be linear. Even your health is not linear in that process, right? Many things are not going to travel in a straight line, and sometimes movements will hit resistance, and those resistance points highlight where the structural levers truly are. In this case, regulators and IP constraints became part of the growth landscape, and that dynamic, not just price tags, is what will determine whether lifetime value expands over time, because at a high level, lower friction increases conversion. I feel like I sound like a broken record repeating this, but I really want you guys to catch this. And then engagement increases retention. So retention, the byproduct of that is just increases lifetime value, and higher lifetime value supports a better valuation 7 days a week. So the pill episode just hit a growth path against real world constraints, not because the idea was wrong, because the execution just collided with legal frameworks that the platform must navigate. And if I could just invite you to reframe the thought around this, the $99 weight loss pill wasn't just a pricing story. It was a potential structural shift in how HIMS could expand its revenue engine. And the recall doesn't erase the economics. It reframes what their challenge is. So the bigger question is, if lower friction leads to higher retention and more cross-sell in expanding to different countries and different products, but they're still limited by regulatory constraints on launches, how does HIM evolve its strategy to truly expand lifetime value over the next 3 to 5 years? I think that is the deepest structural question investors should really wrestle with, not just whether this pill existed for a few days, not whether they were able to pull it off, not about the headlines that came out. I'm personally a big fan of the headlines that came out because it's a big sign to me how reactive and how retail-based this market is and how quick people are to really exit. I see this as a very, very solid long-term play. And honestly, if you're trying to scale at the speed they're scaling at, you're going to come across some restraints, some bumps. There's going to be some curves in this graph. There's going to be some up and down. So love to know your thoughts below. I'll see you tomorrow in the next video.